Hey, what's up, guys? Leo. So the crypto market is collapsing because everybody's freaking out about Google's Willow chip, which is their latest quantum computing chip. So it's apparently Willow's performance on this benchmark was able to complete a 5-minute task for Frontier that was the leading quantum computer out there. It would have taken Frontier 10 septillion years, and it is an absurdly big number. If we look here at this post, it would be, I can't even, I don't even know how to express this. It's got, let's see, these are going to be sets of zeros. So 1, 2, 3, 4, 5, 6, 7, 8 sets of 3 zeros, and then 10. That's just an unthinkably big number. So that's how long it would have taken Frontier to have processed this computation, but Willow did it in 5 minutes. It's astounding what they've been able to accomplish. Now, the fear here is that the quantum computer would be able to use Grover's algorithm to essentially do a 51% attack on proof of work systems. On proof of stake, it's a little bit more about using Shor's algorithm to go after the private seeds and securing the signatures. The fear being that they'd be able to decrypt the private and public keyed seed pairs for signing transactions. Now, both proof of work and proof of stake are both working on hash functions or key signing signature schemes that will be quantum resistant, but that's not here yet. And to be honest, I think this is all overblown. I think it's just fears because, okay, so let's take for a second, who is running Willow, right? It's Google. Okay, so why would Google want to attack crypto? It doesn't make any sense. For one, they would open themselves up to a ton of legal scrutiny. I mean, there's no motive. You know, why would Google create this quantum computer just to attack Bitcoin and Ethereum? You know, those are things that hacker groups would want to do, or, other countries perhaps. And it's not like Google is giving this out to people. It's not like they're selling it as a product where anybody can go and buy and then they start using it to attack proof of work and proof of stake systems. Okay, so there's really no threat in that regard. Google has no motive to do it. It's not available to public. And even, I would argue that it's probably so secure, like they probably have it so locked down, that technology, that this breakthrough technology that they have, that there's virtually probably no concern about it escaping and some hacker group getting their hands on it and being able to replicate it and attack crypto. And by the time that it's so advanced that this is something that is available to the public so that some bad actor could use it to attack the networks, Bitcoin and Ethereum, they're going to be protected because those teams are already working on quantum resistant solutions. And also, by the time that happens, that it is publicly available, quantum computers are going to be securing the blockchain anyway. So it's really kind of a moot point. I think what it is it's a trigger for over-leveraged positions to essentially get squeezed out. So if you have a lot of long positions, squeezes can happen to the upside or the down. Essentially all it is people get into over-leveraged positions, and when it moves against them, they don't have a lot of tolerance. They can't tolerate the price fluctuations. And so when something like this comes out, it scares, it's a scary thing. And so stops get triggered and price collapses. But it's really not something that you need to worry about. Crypto's not going anywhere. Nothing's collapsing. And for those that don't know, typically quantum computers, I haven't seen Willow, but I have seen some, and they're massive. I mean, they're the size of entire rooms. They're the size of houses. I mean, and they have to be liquid cooled typically down to like almost 0 degrees from what I understand. So this isn't something that some hacker group can just build inside their apartment and, then go to town attacking things. So it's really not a threat in my opinion. This is a nothing burger. All it was is it triggered a pullback in the crypto markets that is healthy. So let's go ahead and take a look at the technicals here and see what we can figure out. Okay, so first thing I want to take a look at here is the Elliott wave count, because Elliott wave is excellent at organizing the price, giving you an idea of where we are in the chart. So if we look at the chart here, I have us on a third wave, okay? So we put in our first, put in the second, and now we've moved up on the third wave. And what comes after the third wave is the fourth wave. So it gives us a little bit of a pullback, a little bit of a break from the massive run that we've been on. So you know, that's why I say that I think that this whole quantum scare thing is just an excuse for the market to pull back, because what very likely happened is people overloaded. They started buying up the price, getting in overly leveraged situations. And because squeezes can happen both ways. You can have a long squeeze or you can have a short squeeze. All it is people get into over leveraged positions that they can't manage. And the second the price moves against them just a little bit, it starts just cascading stop losses and the price moves down very quickly, or the price can move up very quickly. And so that's exactly what's happening here. We had the quantum scare come out. These traders that over leverage themselves end up getting scared, and they close their positions and forcing the price down. To me, this is just a pullback. This is just a fourth wave pullback. So right now we're likely on the A wave of some sort of an ABC correction down into the, let's see what we have here. So I think that price will pull back to, so we have the 382 here. Now from Elliott wave standpoint, the most likely retracement for a fourth wave is going to be between the 382 and the 50. That's the red line here. 382 is going to be the gray line. Now, from a algo perspective, that's going to be what we're looking at here. This algorithm trades across all markets. Financial institutions use it. Insurance funds use it to buy, and because whenever you pay in for life insurance, for example, they use this algorithm to purchase products or purchase assets of all kinds. So basically the way it works is that price pulls back to the 50% retracement. The algorithm kicks in, it begins buying, and they will continue to buy as price moves down to the 618. If it gets past there, then it'll flip. But what I expect is that price will move down, and if it gets down this low, they will engage, and then we'll see price move away fairly quickly. The other thing to look at here is the volume profile. So you're probably familiar with seeing volume by price. What this is volume by time. This is showing you volume by price. So if we look down at the bottom of the chart, you can see we have a lot of volume here on the right side where price traded. If we look over to the left, you can see that price hung out in this area, trading up and down, because there's a lot of price volume there. There's a lot of price acceptance. People are very comfortable with the price being there. As price broke out into looking to the right side of the chart here, into the low volume area, price will move very quickly through low volume areas until it gets to a point where people like the price. And so people start trading it in between these new high volume nodes. So low volume nodes act as support and resistance, and they act as essentially, if you move through there, it just means that you're in price discovery. It's going to move until it gets to another high volume node where price is accepted. So the way that we use this is we look for confluence on the chart to find, okay, here's a low volume node where I have this blue line. Oh, that's exactly where the 382 is. Oh, that's where the 55 EMA is. That'll likely hold as support. Okay, so I have a lot of confluence here saying that this is where price is going to go. So, and that being that I believe we're on a fourth wave, I'll be adding to my position right around the 3350 area for the long. And I'll likely continue adding to my position as it gets lower and lower, because I like Ethereum at any price, but to be honest, I just love the asset. But the reason that I have it going so much lower here is because of the low volume node. If price does start moving back down to the 50, we'll likely see a reaction at the 50 as those algorithms engage and begin buying the asset. But it's mostly because of the low volume node. So as volume drops off, that's going to be the most amount of resistance, more so than the 50% retracement. Because we never know what pull to use that the algorithms are using. So, I mean, they could be using the overall pull. So we go down from the bottom here, they could be pulling overall. In fact, I can almost guarantee you there is an algorithm there using the overall, but there could be one here as well. We don't know until we see it come back down. But, so if we use the overall pull and it comes back down here, you can notice that there is another low volume node right at 3000, right at the bottom of where we see these wicks that kind of just bounce. So, very likely that could be where it goes to. So that's also why I have that, my box going that low. So in summary, nothing to worry about. Just a normal pullback in the crypto markets. Don't forget to subscribe if you found the content valuable. I promise I'm going to have a lot more value coming to you, so you'll want to subscribe for that. And until next time, I'll take it easy.